Hello and welcome to the Fabrity Talks podcast. Here we talk IT news, tips and tricks, use cases and case studies. If you have any questions about the subject that we cover, don't hesitate to drop us a comment or a message. If you would like to know more about what we do, visit our blog at fabrity.com or check out the links we provided in the episode description. My name is Michał, I'm a digital marketing manager here at Fabrity. Our guest today is Tomasz Burczyński.
Yeah, hi Michał and good morning everyone.
Tomek, you have almost 20 years of IT business experience at highest levels. You're a CEO of Fabrity and VPO of the K2 Group board. Well, you have quite unique insight into current IT situation. So, episode 5 is called Is it a crisis or a return to normality? Okay, Tomek, we have to choose the starting point of our discussion. So I think, we could start with 2008. It was, quite big crisis, one of many and many to come. What would you say, is it a good starting point for our discussion today?
Yeah, maybe we can start with a quite opening statement that, crises are usually about something different. So in 2008, we have a crisis that in its foundation have financial overheating. So it was basically a crisis that was caused by overheating the loans market and mortgages market. And that caused a domino effect in banks, investment banks, and then problems with layoffs and general problems in the money and the economy, so to speak. It appears that crises are usually about something different, because right now, if we tell that we have crisis already, it's caused by the war, of course, and the problems with energy, problems in general in the energy sector, and problems with inflation caused by.
Let's try not to go that far. We've started with the crisis in US in the banking sector, and there was a significant layoff in industry. In banking, what were the main thoughts after that event? I mean, what could have we learned from that?
Yeah, so basically, the lessons learned, I believe, from the crisis 2008 that companies took was like to try to be more focused, try to be more anti-fragile, try to keep more money inside the company, look over the personnel they hire, not to overstuff, try to have a good relation between direct costs and indirect costs, and maybe in general, just to count money better than it was before then.
Okay, so just to summarize, take care of your people, hire wisely, keep calm, and maybe
focus on your business, basically, and try to think more about the future. Maybe not to try to be that relaxed as before. Maybe try to be more sharp in terms of what you think about your business and how you foresee the future.
Okay, and crisis ended as they usually do. We had some growth afterwards, and the pandemic started. We could leap into pandemic times.
Yeah, I believe that between the 2008 crisis and 2020 pandemic, COVID-19, it was a decade of blooming. So in the economy, we can say that everyone was happy with a general economic development, and everyone was happy with how their companies developed.
So the question is, did they learn the lesson? I mean, because it seems that IT industry behaved a little bit different during the pandemic when compared to other industries.
Well, it's easy to say that pandemic was something very unusual, the so-called X1, and everybody was surprised, and it was like a total disruption for everyone. And sometimes maybe we can tell that different sectors and different companies were more or less prepared, and I believe that sometimes it was a matter of luck.
Yeah, well, many industries were not prepared. Actually, if the pandemic would have happened 10 years before that, nobody would be prepared. But we observed, tremendous shift into remote work.
Maybe let's focus in the first place on how the digitalization was on the age of pandemic and how different sectors were prepared for the pandemic, for the shifting to more digitalized business models and to remote work.
Okay, so the question would be here, how different industries and different countries, perhaps, how did digitalization look like in different industries and how did it look like in different countries? So, for example, there is great distinction between Germany and American model of digitalization.
Yeah.
Could you comment that?
Yeah, it's very hard to generalize, but yeah, if we thought a little bit how different economies are built, what is the greatest portion or focus on what parts of services or production, so we see different, big differences. Sometimes it's a matter of sometimes how the public and state investments are being done in digitalization, and there are quite, so to speak, differences between Germany and even Poland, because Poland was 10, 20 years ago or 30 years ago, starting from the very beginning, the telecommunication infrastructure was quite rebuilt, and we have in Poland quite significant investment in the telecommunication infrastructure, both in the private and public sector. And in Poland, we have a quite significant coordination and investment from the public sector as well. Maybe countries such as Germany have a little bigger depth in this area.
So very, very strong economics, quite old as for Europe, because was building up back from 1945, but that implies some certain drawbacks, like lack of proper IT, I would say.
Yeah, it's as well, in the first place, a matter of education, higher education, which is directly linked to economy, on the profile of the economy. If you think about Germany, is quite focused on manufacturing, production sectors or industries such as automotive, chemical sector, machinery. These like big building blocks in the German economy. And it's not that quite focused on services. And basically, if we think about how digitalization is linked to these different focuses on parts of economic, there's definitely a correlation between which countries that are more focused on services, for instance, financial services, are in general more digitalized. And if we look back to 2020, I believe that it was the case that these countries or these economies or specific components were quite much more prepared for the unusual situation.
It's quite difficult to digitalize manufacturing. I mean, you can do some kind of documents, flows and stuff like that, but you still have got factories which are building actual things.
This is true, and so to speak, sometimes, as a service provider and IT company as well, when we have a look over different sectors that we have clients in, sometimes we see very modern approach to IT as such. In a company's board, we have a vice president that is responsible for IT services within the companies, meaning that IT and digitalization is very important, is a part of the business. Digital transformation is a part of competitive advantage for such companies. And on contrary, we can tell that there are still some companies and so even sectors that treat a little bit still IT and investment in digitalization from the perspective or that these are the costs only. So if we think about this, it's a matter as this distinction where what is actually the role of IT.
So they don't truly believe the power of digitalization, or they didn't, at least before pandemic.
Yes, and I believe that before the 2020, there was a big shift needed for these companies that was just cost oriented and have a perspective for IT as a cost. They needed a big shift, and they were less prepared for sure, and it took much more time for them.
So now they got good reasons to shift toward IT, and this delivers the opportunity for IT services.
And I could tell you a story that I remember from March 2020 that probably for companies as ourselves, it took us a day to shift to remote work because we have already Skype, for instance, we have Link, back then, and it was quite easy for us to switch to 100% remote working from 100% working on site, because we were quite prepared, and it was as well for us a matter of security. So security in terms of central systems, and security in terms of laptops that are given to each and every employee. I recall that when we talking to our prospect clients in March 2020, before the pandemic, just before the age of pandemic, we have a quite new prospect clients, and everybody was very optimistic back then. It was spring coming, and everyone was talking about new projects, new investment, new opportunities. And when the pandemic started in mid-March, I recall that we have in the, so to speak, Central Europe, Germany, Benelux countries. So this was like middle of March 2020. And I recall that just in this point in time, it took a very long time, like 2 months, 3 months or more, for these companies to prepare for the remote work only. And I recall talking to these clients, and I was asking, hey, okay, I know this pandemic, but we talk about new projects. What about these? And I recall that this client was telling me, oh, no, we ceased everything because we need to switch to remote work. And it takes a lot of work for us because we need to prepare systems, we need to prepare security. We need to deploy remote communication.
Yeah, but that wasn't an IT company, was it?
Yeah, that's true.
Okay, so just to put the things on the landscape, after the pandemic started, some companies had some very hard times transferring their mindset towards remote work. It was quite easy for the companies who had all the systems in place and were focused rather on services than manufacturing.
Sure.
As for markets, our insight is that some countries who have strong economy might have more problems with that shift. Some with more services, more IT, were adopting this much easier than the others. So actually, pandemic was the opportunity, and it should be considered as such for an IT companies, because many other had to make tremendous leap towards new model of work. Would you agree with that?
Yeah, sure. It is worth saying that, it all depends, meaning that a pandemic was a big disruption. So for instance, if you think about the automotive sector, no one was willing to buy new cars in the spring of 2020.
They were useless.
And if you think about the problems that production companies had at that time, so it was just a matter that factories were simply closed because of reasons of the pandemic, and it was quite easy for us as a digital company to work remotely, and we not seen much of a problem, but production companies did. And if you think about, for instance, entertainment or traveling, it was even worse. But if you think
restaurants, hotels, all that stuff, that was just
no one was traveling,
shut.
And even if you think about fashion companies, fashion and beauty, so I recall the times as everyone was, wearing baggy clothes, sports clothes. No one was really buying new clothes or shoes because we have them, and we were sitting at home and we simply did not need one back then. So anyway, there were companies, mostly service-oriented companies, very digitalized companies, such as Netflix, so to speak, that had a tremendous growth back then. So it was sometimes. It is worth to say that it was a big disruption, and it was a matter of how your business looked actually back then, and how you were prepared, for a shift to more digitalized model.
Yeah, I remember that Netflix was scaling up, and they needed some new servers because they were so heavy used these days.
And you may think that, okay, if you are, for instance, an automotive company, it is very hard to tell that you can shift your business model because, it's well defined anyway. It is quite impossible to buy cars online. Yes, you will agree. But
there are some attempts. Nevertheless, I got
maybe, or at least order
advertisements about.
But if you think of so to speak retail sector, it was it is not that easy to judge. So someone was less prepared and someone was more prepared, depending on how they understand and how they were investing in the e-commerce back then or before the pandemic, and how they believe in digitalization and moving to online channels of sales. And I believe that there were big differences in how the different companies in specific sectors overcome the pandemic back then.
Well, this had come to an end, and we thought that now we're going to flourish. And Russians made us a surprise, quite sad one. And another crisis ahead, one after another.
Well, it appeared so, but you may argue a little bit if pandemic was a crisis. It was better to say it was a disruption. But like we already said, that is another crisis that is about something different. So we have problems with energy pricing. We have problems with inflation. And in parallel to inflation, we have a problem with recession, so to speak. A connection of these two factors is quite dangerous for the global economy and for the economy of specific countries as well.
So the economy is slowing down due to high prices and inflation. And how does that affect IT, which was quite, warmed up after pandemic?
Definitely, it is worth saying that what was the influence on the pandemic for the IT sector. So maybe let's begin with that. So I remember that everyone in the IT sectors, IT services sector, in the March 2020 was very worried because we foreseen that there will be a big collapse and no one will be more working. There will be no money. That will be payment drawbacks, and the situation will be very serious. And but shortly after that, it came up that it is quite different. So everyone started working very, very, very hard.
Yeah, predictions are always hard because they are.
Yeah, so I recall that
fulfilling.
I recall that we were worried about that our clients will cease all the orders and that will be a big collapse. But it appeared that we started to talk to our clients about, something different, different projects. So maybe what was started was back then a little bit slowed down or ceased. But the total volume that we have of cooperation with different bigger corporate clients in general has increased, but the different projects came to light, and we started to deal with more digitalization and business model shift projects. So and I believe that was a case of different companies in the IT sector.
Okay, so it's worth to point out that we mainly cooperate with big corporate clients who have big projects and very good budgets to cover these projects.
Yes, when we were at the age of pandemic, that was a little bit hesitation between in companies such from production sector or from pharma sector, because they didn't know as well what would happen. They were quite quickly became to shifting to more complex and business-oriented digitalization project. Investment in IT, a little bit moving to changing, doing business in more digitalized way.
So was there a little hesitation
was
when
a little
you were
bit
talking with them?
hesitation, but as I recall it was like maybe 1 month to redefine what will be the new order and what should be the new focus in business. But it was not that obvious for companies that were in the HoReCa sector, for instance, travel, entertainment. So pandemic and as a whole, the year 2020 was quite traumatic for them.
Yeah, it all was closed. And when talking about our clients, we mean pharma, finance, banks, what else?
And industrial
Healthcare.
production, healthcare. Yeah, it was quite interesting situation with healthcare or private healthcare. You may imagine that, for instance, there should nothing change. People need to visit doctors. People need to do it as they did it before the pandemic. But you would say that, it can be done remotely. But apparently what happened is that we were adjusting very quick. It was very strategic need to do that. So telemedicine and moving healthcare sector to working online and introduce new technologies was quite needed, and it became quite quick shift after that.
Okay, and what about manufacturing? Because I didn't mention manufacturing, and we've got some crucial clients there.
Well, I recorded our clients from automotive or machinery sector had episodes that they had closed factories for a month, two, or they needed to have a reduction in staff to handle the sanitary restrictions. So, for instance, factories were working slower, or they have one shift instead of two shifts or 3 shifts daily, as it was before. But it was a kind of up and down. So we have outbreak, then it was a release, and then another outbreak. So there were complications as well in the production itself. And it's worth to mention that a few months after that, when the pandemic was decreasing, we have problems with supply chains from Asia, from countries like Taiwan, related to parts, related to electronic components, and I believe that what clients were saying, that this actually influenced as well, even a little bit more than closing factories for some time.
Okay, and well, pandemic started to fade away, and it seems that there was quite a lot of money that were not spent. And where did it go?
Well, I don't know, but but the assumption is that for sure that the year 2021 was the year when we faced the biggest investment in startups. So maybe I could assume that there was a little bit too much money on the side of investors, because there was not a collapse in the economy in 2020. But it doesn't change a thing that we needed a stabilization after the pandemic, and probably the part of money that might be invested during 2020 were not invested, and in 2021 we have effect of doubling this money that could be invested in 2020 and 2020 and 2021. So it's like a doubling that investment money in a single year.
So a lot of funding for startups after pandemic.
Yeah, definitely that. And what we seen that there were a lot of startups that needed ID services for developing digital products and for setting up crucial business services for them, a foundation actually of their business. And there was a lot of requests for proposals, and it was a lot of move of the market. And sometimes, of course, were better. Some of these were worse, but definitely the market was pushing the money, and there were a lot of new startups, and there were a lot of ideas that needed ID services to develop products and show it on the market for the verification.
Okay, the life is like that probably it has to go down and it goes up. So what happened? A lot of startups, a lot of money, a lot of work for IT.
Well, sure. What I recall that actually the year 2021 was a big hype. So if you talk about corporate clients, so to speak, general industry on manufacturing, they were still investing. So they continue to invest in shifting the models, being more digitalized. And it's worth to mention as well that if we are talking on digitalization, what firstly come to our minds is that this is core business, digitalization. But if you think that there was this big shift to remote work, there were as well a big depth in, a very common tools and a very big depth related to just simple work of teams that needed, new way of communication, Teams, Slack, workspaces to keep files. It was not that obvious that everyone has it. These kind of corporate companies as well needed to continue with investment in, setting up new digitalized environment for teams working remotely, and this is sometimes related to low-code tools, automation, ways of communication, and sometimes a very small applications that needed to be built for these teams to effectively collaborate. So this is another story.
Sure.
But the other side is that during the year 2021, we have this big bloom of startups as well. So we have like market hitting. We started to have really, I recall it as the biggest demand for IT services and biggest demand for, engineers, IT engineers and IT specialists in general.
So everyone was hiring back then.
Yeah, definitely the labor market of IT engineering was very overheated because we have a big demand from corporate companies that continued from since 2020. And we started to have a big demand from startups and a lot of digital products-oriented projects. So to speak, there was started a trend with salaries go up, that needs to be adjustments related to rates that are offered to clients. And it was the process that had started as well during the year 2021. And this rise of rates was accepted as well, and we have a feeling that both corporate clients and startups are accepting this situation because that's from the other side this need of continue the investment in digitalization, and from the other side in terms of startups there is a need to just develop new stuff, new products and services.
Okay, so prices go up, there is strong demand for people, for IT staff, corporate clients are making their projects, and there's a lot of startups who are delivering their ideas to the market.
Yeah.
And there starts war in Ukraine.
You need to realize that some of these startup projects were in a quite early stage, because if you think that a lot of projects have started their blooming investment during 2021, it was like before launch or in early stage after first series of funding, generally early stage, so to speak. When the war began, it was a kind of another domino effect. I would say that for sure we started with energy crisis, oil.
And that, of course, translates into inflation.
That translates to inflation because oil is about transportation, and transportation is about everything what you buy, and it's not a difference if you buy it online or if you're buying just in a traditional grocery store. Doesn't matter. It affected everything, and that's apparently inflation. That's afterward it comes to the economy must be cooled down. So it's a matter of rises of interest rates, and interest rates are purely the price of money. So definitely it caused the effect of...
prices of money go up, so startups have less money for their ideas.
So definitely if price of money expressed interest rates goes up, the volume of money that is delivered to innovation sector or startups, purely to new companies to be invested, it's collapsing. So it's definitely not that big portion of money that we have 2 years ago. So definitely it's not. it's not the case right now. So we have a new reality based on that. And from the perspective of IT sector or IT services companies such as we are, it's a matter of a quite big cease in demand from scale up and startup.
Okay, because the quite hot topic in our industries in last few weeks, I would say, is IT layoffs, because we heard all that Facebook is laying off people, Microsoft is laying off people, Google, I think also, and recently also some software houses in Poland are starting to do that. So we could say that in case of Facebook or Google, it comes from lower consumption because, well, they are in advertising more or less.
Yeah, definitely we have really different cases here. So we talk about layoffs in the IT sector, but we have really different type of companies that deal with IT services. But from the beginning, I would like to say that it definitely comes with a delay. So if you imagine that you run an IT company or any other tech business, so you should care about people. So we are not facing the situation that something has changed and the layoffs are 5 minutes after that. So definitely...
Yeah, it's never rapid. It just cause an effect in long term.
Yeah, but my point is that if you are a manager of a company or manager of a team, you definitely should care about your people. I believe the companies have been waiting already. So the layoffs that we see right now, it's a matter of, from the one side, it's a matter of, caring about people. Maybe we will keep these people. Okay, so it's like it's thinking like that. Maybe it's not that bad. Maybe that something will pop up. Maybe we still don't need to fire these people. Maybe we'll find another client. Maybe we'll set up another project. Maybe we'll find another funding for this stuff that actually don't have nothing to do right now. So my point is that it comes from delay and with delay and the effects that the causes of the situation are like in the mid 2022. So the layoffs that we see right now actually have a root cause that became shortly after war, definitely before the vacation of last year. And the other thing is it's easy to generalize because we talk about different layoffs. We hear about layoffs in companies such as Facebook, Google, or even Microsoft. We hear about layoffs in companies such as Uber, for instance. And recently we hear about layoffs in software houses or IT service.
Okay, so let's try to break it apart, because Microsoft is very different from Google and Facebook, and software houses are totally different stuff, and I think Uber, another story. So could we start, for example, with Microsoft? What do you see there?
Well, yeah, the Microsoft is doing layoffs, right? But Microsoft is quite different. Microsoft is a company that is very business oriented. So meaning business that revenue comes from cloud. So the biggest portion of Microsoft revenue comes from cloud, and cloud is actually for enterprises. The point is that if we compare, for instance, three biggest players on the cloud market, on public cloud, such as Amazon Web Services, Google Platform, and Azure from Microsoft. So this is a little bit different. Azure is a little bit different because Azure is mostly for enterprises. So it's a history of Microsoft related to enterprises. So I would say that in general, when Microsoft is doing layoffs, is a little bit matter of cooling down, but definitely is something like reorganizing the projects or reorganizing the priorities that they are working off. We see it was a big deal with a Copilot in Office 369 presentation 2 or 3 weeks ago. So definitely Microsoft is doing big things right now. So
you don't get the impression that they have problems, really?
Yeah, I would bet on that. I would bet on that because Microsoft is quite stable and they have a big thing with AI, definitely right now. So I would say that if they are doing layoffs right now, it's a matter of reorganization or setting up different priorities on different projects.
Okay, but Facebook could be quite different.
And Facebook and Google might be quite different because these are companies that are strongly related to advertising. So to speak, they are a little bit of advertising companies.
And consumption and inflation.
Yeah, so
is a problem.
That's right. So their business is very, very related to consumer consumption. Because when the consumption goes down,
budgets go
which
down,
is related to layoffs, unemployment, and both pricing, inflation. So when the consumption goes down, the advertisement goes down as well. Maybe it's not that you can judge it by intuition, because you may tell that, okay, if the consumption goes down, you should advertise more to, catch up the consumption with, what you expected, how much products you will sell. But it's not the case. So when the consumption goes down, the advertising spending and marketing spending in general goes down as well. So this is the root cause of the revenue sees that Facebook and Google have right now. And of course, it's as well a matter of reprioritization, setting up different priorities, and maybe not each and every project that were in place is needed, or maybe not each and every project is the same importance that much, and maybe we don't need new projects, new staffing, and so I believe it's this kind of effects. And we don't have an election in the United States as well, so the advertising that comes from candidates and advertising that's related to political campaigns is as well a big factor for this kind of companies. It's worth mentioning the cases related to Cambridge Analytica and we already know it.
Sure. Well, let's not go there, because it's a topic for a separate podcast. As for Uber, that's quite obvious: inflation, consumption,
it is probably
less money to spend.
More even direct relation between consumption. So it's a cooling down. Not every project is that important. Let's redefine our priorities. Let's cool down a little bit. Let's make it more rationable. And you may think that the overlap of investors' perspective is as well important in this situation. So when this stock exchange market goes down as well, there are less intentions that for the companies to grow. There are less ideas to deliver money for these companies from this new emission of shares from the stock market. So I believe that this is a period for this kind of companies to cool down a little bit, reorganize, because there is not that much pressure for investors as well. So they need to they don't need to push that much and show that they are doing that much of new things and promise a new big rise of revenue and
So let's look at the fourth category that we've listed of great interest for us. So software houses, what is going on there?
I believe so. That's my private definition. That is like sometimes we have two different categories of software houses or service-related, IT service-related companies. So we have companies that are a little bit younger. They are mostly focused on doing digital products. So naturally, they are more related to startup scenes and more related to startups as a clients or scale-ups. Since there is less money for investment on the market on the startups in general or in scale-ups in general, these kind of software house companies go into a little bit more tough times these days. The another type of software houses that we might define, it's more like Fabrity, where we have more or definitely a portfolio of corporate clients. They are more stable because they are not that dependent from external investments. So they already invest their money, and usually their business is quite stable. Of course, there are huge companies sometimes as well. So you may refer to them that they are too big to fall.
Okay, so that seems that software houses tended to pick their clients in different manners here.
Well, yes, it depends. It depends on how the sales process are organized, and it depends on primary focus. So I believe there are different approaches to that, and some IT service companies are really focused on short term. So their goal is to have a really big number of leads that are coming from marketing funnel. They process their leads, and they are really focused on gaining a big number of new clients with a short-term cooperation. And this is their approach to margin optimization.
So shoot and run.
A little bit, hit and run. The policy, of course, that everyone is focused on a long-term relation, because it's always easier to maintain existing client and then fight for another new client. So that's obvious. But I see that there's a kind of approach that is focused on short-term, because there's a profile of clients, like a startup companies, that have a quite big portion of money, relatively big, that needs to be spent in a quite short time. So usually the portion of services that needs to be delivered, it's as well in a quite short time frame, such as, 2 months, 3 months, 5 months, but not much longer than that. This is quite intense. So since it's quite intense, the big focus is to deliver.
Okay, but there's a drawback. I mean, you have no projects coming in next months, next years.
Yeah. So usually there is a big focus to deliver, and you may refer to it as like a quite big pace. And in this big pace, there are usually bigger teams, and the margin from this kind of project is usually, I would say, bigger as well. But when the project is finished, it's a matter of putting into market as a new product, for instance, and it's a matter of market verification. So actually, there is not much to do anymore with such a client. So
and you got to find work for people who were in that project. That's another thing.
So it's a matter of rotation. The focus of these companies is really on portfolio rotation, clients, gaining new clients, and actually doing in an intense way short-term projects for them, even if these are big things. It's not said that they are like small projects. Sometimes it's quite big projects and fancy products. Yeah, on the other side, it's a matter of a focus how we have, for instance, as a company, that we look for a long-term relation, and we're trying to. Of course, we are not very selective. It's fair to say, but we are trying to approach new clients that we could work with in the long term. So it's not only a matter of a single project. So I would say that it's typical for us to start with a quite small project in the beginning, to test the relation, to test how we can work. And actually this is like knowing each other, having dates, for instance, something like that. And then to have a right opinion of what we are capable as a service provider, and as well to have a right perspective of a client needs, of a client approach, way of working, and of course the potential. This approach, even if it's not that, so to speak, fancy, I would say it, because it's not the matter of doing very fancy and shiny projects from the very beginning, and the big things come after years. But it is quite stable for us. It is a matter of margin optimization that comes in the long term. I would say at least 1 year that we have. So we have viewed that we actually trying to measure margin of a client in the second year of a cooperation. So it's of course we are not focused on losing money. It's that for sure. But definitely we can accept a lower margin for the first 1 or 2 projects, with a smaller project when we start the cooperation with
and that's what's paying back now. I mean, in the times where startups are having hard times, if you get this kind of approach to building your client portfolio, you're quite safe.
Sure. And the other thing is that you may try to imagine actually what different sectors, different clients' businesses about. So if you imagine, for instance, automotive, And if you compare, for instance, company that is producing cars and company that is in the machinery sector, and for instance builds machines for construction sectors such as excavators or cranes, for instance, for the building side. So if you imagine that they are quite the same companies in terms of what they do each year. They both have production plants and factories. They all have assembly lines. They all are related to supply chain and delivery of materials. So in terms of the doing day by day, it's you may tell it's quite similar. But there's a big difference if they are producing products that are directly related to consumption. So what kind of clients they have. So the automotive companies have B2C clients. So they are actually offering cars to consumers. But if you think about this machinery company, so it is related to construction sector. So it's like products offered to another company. So it's B2B products, even though that are produced in a quite similar way. And if you think about different relations that, are that, okay, I do something for another B2B sector, for another companies, and they are doing something for another companies and in the end you have a company that is directly related to consumption.
Then you're more immune for fluctuations like that.
Yeah, that's a big complicacy between these layers, how the first underlying company that is producing this machinery product is related to crisis, because it creates each layer that's related to consumption creates specific delay in consumption, and depending how the crisis will be big and long in time, you may even think that some companies will not even notice that the crisis have come, because the network of relations in the economy and the specific delays that are affecting these companies are very delayed. It might not be that traumatic, and they might not suffer from the crisis that much.
Okay, I think that's a good closing line for today. So thank you all for today, and thank you for participating in Fabrity Talks. Thanks for listening. Michał from Fabrity, and thanks Tomasz for participating.
Thank you very much, Michał. It was a pleasure.